I do have some recording of live trades that I want to show you guys. So I'm just gonna have to get those pulled up when it does get to that part because I'm on Jadon Zoom. I got to switch over to my Zoom. It should not kick the Zoom out. I don't think so. So you're just gonna have to give me time to get that one pulled up. If anything, I'll pull it up on a different Explorer and then get the link and pull it up. So let's hop into it. How to master order flow. We're also going to be talking about, again, psychology, all that good stuff. But what I want you guys to do for the next 60 to 90 minutes, close out all unnecessary tabs on your devices, your computers, no Twitter, okay? And get rid of all that. Put your phone away and make sure you take notes. All right. What I'm going to show you guys is a complete framework that separates consistently profitable traders from everyone else. This isn't about finding better setups, it's about becoming a better trader. I'll get you your Bookmap link later, I promise. Okay. So today's agenda, I want to help you guys find clarity in the market, give you clarity on why the markets move, which is going to be the order flow, confidence to trade the system. So my exact system of supply and demand and fibs with order flow, and to also help you unlock your potential to trade my exact strategy. So I trade live every single day. You guys see this happen all the time, especially if you're in Team Bull or whenever I do the free Zooms. You watch me trade the same exact thing every single day. And that's what I'm going to share with you guys today. So again, I'm here to help you guys become a consistently profitable trader. Let's see if we can skip that. So why this free masterclass exists, I get asked all the time. You'd actually be surprised at the amount of DMs I get about this. How do I use order flow? Because it looks very confusing. However, it's actually very simple once you understand how to use it. What am I looking for in price? So again, we'll go over that. How do I trade these setups of supply and demand with order flow? And what is my exact strategy? So I simply don't have time to answer all these DMs. I try my best, but I do get a lot of DMs on Discord, Instagram, all that stuff. So this masterclass is my way of giving you a complete framework on my exact strategy. So real quick, before we hop into it, I want to know, what is your biggest challenge when it comes to trading? Taking profits, psychological? Do you not have a strategy? Are you forcing trades? What is it? Staying in trades, entries, exits, not taking trades, revenge trading, strategy, psychology. Okay. So I feel like order flow is going to help a lot of these struggles that you guys are struggling with. So like holding on to winners, order flow is going to help you understand where are buyers and sellers in the market. When should you be taking profits? When should you be moving your stops? And when should you get out? Or the losses are bigger than winners. So again, with order flow, you know exactly where the buyers and sellers are sitting. It'll help you understand when to get out of your trade, keeping your losses small. Exit, same thing. Order flow is going to help you with. Entry points, same exact thing. Order flow is going to help you confirm when do you actually get in these trades. Strategy, again, all this is going to be solved by order flow and exactly how I trade. Holding during drawdown, same exact thing. So I want to get you all up to speed. What separates profitable traders from everybody else? It's not about having better indicators besides order flow, secret strategies, market predictions, or luck. It is psychology, discipline, and execution. 80% of trading is mental, 20% is mechanical. Okay. In this free masterclass, you will discover psychological framework, the exact psychological framework I use to stay disciplined during both winning and losing trades, emotional control, how to eliminate revenge trading, FOMO, and overconfidence forever, order flow, my complete order flow strategy that removes emotion from trading decisions, and risk management, the risk management system that protects your capital while maximizing profits. So there are three pillars of profitable trading. The first one is going to be psychology. Again, we're going to go through psychology. It's probably going to be rather quick because I feel like psychology is something that comes with time and experience. So master your mind before you master the markets. They kind of go hand in hand, to be honest with you. But then second, the most important is going to be strategy, key levels, plus order flow, simple, repeatable setups that work in any market. Risk management, protect your capital like your life depends on it. So here's a little quote from me. If you're not trading with order flow, what the fuck are you doing? From a wise trader named Brandon Trades. Literally, I'm telling you that order flow is going to change the way that you trade forever. There's a reason why I have Bookmap up every single day that I trade. Okay. It's become a huge role in confirming every single trade that I take. So, how valuable is this masterclass? Agree to treat this information that I'm sharing with you as if you just invested $2,000 in your trading education. If you're committed to implementing what you learned tonight, say yes in the chat. Just want to make sure everybody's all on the same page and you guys are ready to actually learn this and you're not, distracted, you're not on your phone, etc. Good. Just needed some water. Okay. So, where'd my mouse go? There it is. Why this opportunity is life changing. Trading is the ultimate skill because you're your own boss, no clients, employees, or inventory. It's recession proof. Markets move up and down. You can profit from both. Even when we have war news like we just had, we can still trade the markets and we can still make money. Location independent. You can literally trade from anywhere in the world. I could have traded when I was in Hawaii. What was that? A few months ago. Traded when I was in Vegas. I trade when I go home. Literally anywhere in the world. We had some people say they were from Qatar, South Africa, anywhere, right? You have freedom, 1 to 2 hours per day maximum. I start trading in Colorado. Market opens at 7:30. I'm done every day by 9 or 9:30 and literally have the rest of the day to do whatever I want. There's not a lot of other jobs that, give you that freedom. And then also unlimited income potential. Your account can grow literally indefinitely. Like I've had some really big wins in the past. I'm sure most of you in here have also had really big wins. But yeah, your potential is unlimited as long as you're smart because your loss can also be unlimited. But who's ready to transform their trading? Comment ready if you're committed to mastering your psychology. Again, we'll touch on psychology first. We're going to go through that very quickly, and then we're going to get to strategy. Cool. Let's get it. So, pillar number 1, trading psychology, the mental framework of profitable traders. Psychology, master your mind before you master the markets. The psychology truth that nobody tells you. Your biggest enemy isn't the market, it's your own brain. Your brain is designed for survival, not trading profits. Fear makes you second guess yourself. Greed makes you let green trades turn red. Hope makes you self-manipulate into holding losing trades, and overconfidence makes you overtrade. Again, how many of you have dealt with one of these 4 right here? I have. Still do sometimes, actually. The thing about trading psychology is it's never going to go away. It's always going to be there. The thing is, when it comes to becoming consistently profitable, we know how to control these emotions better than the average person or the average trader. So, even like, for example, 3 weeks ago, I was taking good trades. The market was still smacking the shit out of me. Was taking like good trades, but they kept ending up being losers. So what does that do to the normal trader? The next time they see an A+ setup, boom, fear makes them second guess the setup. They don't take the trade, and what happens? It does exactly what they wanted it to do. Same thing happens the next day. You see the same setup, but you've just kept getting clapped in the market. So you hesitate, boom, it does exactly what you want it to do. But because I've been trading for so long, I've been trading since 2017. This is my 8th year in trading. I know that my setup is profitable. Again, the same exact setup that I'm going to share with you guys. I know my setup is profitable. And guess what? For the last 3 weeks, since that 1 week, I think we've had 1 or 2 losing trades, or losing days, I should say. Other than that, we've been crushing it. Last week, I think total, we got like what, a little over 40 points on ES throughout the week. So pretty solid. 3 of those trades were 10 points each. And I didn't really even trade last week. I didn't trade that much. So 40 points, that's really damn good. So, I'm talking like per contract. And then let's see. So yeah, profitable traders learn how to ignore these instincts. Again, they never go away. They're always going to be there. We just know how to manage them better than the average trader. So the emotion elimination system. Step one, you recognize emotional states before they control you. Step two, have predetermined responses to every emotional trigger. Step three, focus on the process, not outcomes. Step four, accept that losses are a part of the business. This system removes emotion from every trading decision. So, again, for example, one second. Okay. For example, I take those losing trades, A plus setups, just every time market did not want to work out in my favor. I recognize when I see the next setup that I've traded that exact setup because I trade the same setups all the time. I don't, what's the word I'm looking for? I don't trade outside of the setups that I know, right? So I start seeing it again and I start to hesitate. Okay. I start to hesitate because I just had a bad week, or even in December, I had a terrible month in December. That was my first red month in such a long time. That's like, that really messes with you. Okay. So I start to hesitate. Immediately, as soon as I start to notice that I am hesitating, I start thinking about all the times where the trades have worked out and the amount of money that I have made trading those exact setups. So that is my predetermined trigger if I start to notice that I'm hesitating. I might get a slightly less better fill, but I know because I've seen it time and time again that that strategy works and I have made money from that strategy so many times, right? And then focusing on the process, not outcomes. If it's an A plus setup, I should be in the trade. If it's a losing trade and it's an A plus setup, I still consider that a win. The only difference is if I take stupid trades and start losing money, or even a stupid trade and make money, that's not what I want to be doing. So as long as I am taking an A plus setup, I am happy regardless of the outcome. And again, no strategy is 100%. We are going to have times where we lose. So the way that I saw that 1 week in the market is our trading is just going to be like this. It's going to be like an uptrend on a chart. This is typically how you want to be. This is how you want your P&L curve to be. That 1 week in the market, or if I were to zoom out to the month of December, that was just this. This is where, I was trading the same thing. It's not working out. And that's where I get that little dip in my equity curve and, just overall the win rate. But you keep trading it over time, it's just going to continue to look like this over time. You don't want to be this person. As long as you're like this, you're good. But if you're like this, then we got issues. I'm sure some of you in here are like that, but don't worry. I'm going to share some good stuff with you guys. So, should not say that. Anyways, so pillar number two, key levels, order flow. All right. Simple, repeatable setups that work in any market. So, why order flow works? The strategy works because institutional money creates predictable patterns. We can visually see where the buyers and sellers, yes, it's being recorded. We can visually see where the buyers and sellers are within the market. High probability setups with very clear risk to reward. It removes a lot of the guesswork and the emotion of trading because, again, if we trade to a key level and you can visually see that buyers or sellers are at that level, you're not guessing. You're literally taking the most highly educated, I don't want to say guess, but you're taking the most highly educated assumption. We'll use that word, but it's not a guess, right? And you're taking the trade, right? And it works again in any market condition, bearish markets, bullish markets, consolidating markets. It works in crypto, Forex, futures, stocks, whatever. So when you trade what the institutions do, you profit, especially supply and demand. Those are institutional orders. Yeah, highly assumpted risk. There we go. So why this strategy eliminates emotions, clear entry criteria, no guessing when to enter, define risk, you know your loss before you enter, systematic approach, same process every day, high probability, following institutional money flow. So now let's pull up Bookmap. Let's talk about it. Bookmap and order flow. I'm gonna tell you guys what I'm looking for, what I look for on the charts, because I will never take a trade just based on order flow itself. It's very, 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 very rare that I will ever do that. Most of the time, it's a pre-marked key level in the market, and then I use the order flow to actually confirm that key level within the market. So if we're looking at Bookmap, and I do want to give you guys my affiliate link for Bookmap, if you guys ever want to sign up, here's that link right there. Boom. What you are going to need if you get set up on Bookmap, because I saw a few people ask about it, you are going to have to get Global Plus. I'm going to type this in the chat for you guys. Global Plus, but then you need Bookmap data / CME data. Boom. Unfortunately, I don't have a discount code. They would like very, very rarely ever do discounts. So it's just like my link in general. But Global Plus is going to get you access to Bookmap, and then the Bookmap data with the CME data is going to get you access to futures. Now it's a little different if you want to trade stocks. If you want to trade stocks, then you have to get DX feed. But I mainly am trading SPY, QQQ, the S&P or NASDAQ. So it's up to you. But yeah, you can use it in the aftermarket as well, after hours and pre-market. But yeah, mainly what you need, Global Plus, Bookmap data / CME data. And again, make sure you use that link. So essentially what we are seeing here, what time of day is this? 8:30, I think. What do I have this set to? I think it said Mountain Time. Yeah, Mountain Time. So Mark, let's go a little later in the day. Let's go to 8:30 Mountain Time. Okay. So essentially what we are seeing here, this might look a little confusing. However, it's really not once you understand how to read it. So when you get on the Bookmap, it's probably going to be like blank, or it might just pull up like ES by itself and maybe something else. What you need to do when you are on that specific, if it says BMD, you're going to click up here, go to your indicators, configure add-ons, this button right here. Go down to where it says manage add-ons, and what you want to find is called Trader Map Lite if it's not already on there. So Trader Map Lite is right. Why is it not showing it on here? It'll say Trader Map Lite though. All you gotta do is check it, and it's gonna give you this chart right here. This is what we want to pay attention to. So now when you actually have this pulled up, by default, I'm gonna blind you guys real quick. So cover your eyes if you don't want to be blind, or be prepared. Don't have sissy eyes. But by default, it's probably going to look something like this. Very bright, okay? You want to come up here where it says contrast, black cutoff, and you want to take it all the way to the right. I wouldn't suggest it with TOS. It's not the best. And there's a lot of features that aren't there. Yeah, I just can't show how to add it because I don't have it open. I guess I can do that towards the end, but this is on a replay. And then volume dots, obviously you can make them smaller or bigger. We'll talk about what they are. But the main thing that I am paying attention to when I am using order flow is these shaded areas right here. So if we look up here, you can see that we have this color scale. With the color scale, what this is showing is the amount of orders within the market. So the further to the left on the color scale, the least amount of orders. The further to the right on the color scale, the more amount of orders. So when we start getting into like this yellow, orange, red, dark red, that's where I really start to pay attention. Anything like white and below, or I should say like a light yellow and below, I really don't care about. So I really only care about like from here to here. Now, if we look right here, we can see that we have this white line. This white line is going to be current price. Okay. So the way that we differentiate these shaded areas, and going back a little bit, these shaded areas, what they are is limit orders within the market. So they are orders that institutions put in for buy or sells, and they are only willing to get filled at that specific price. Institutions cannot do market orders. And the reason why they cannot do market orders is because they're trying to put on a lot of contracts. Institutions are not trading 5, 10, 15 contracts. They're doing 1,000, 2,000 plus, right? 10,000 plus, whatever it may be. They're looking for big orders. Who can tell me what's going to happen if they go and market order 10,000 contracts? Anybody? They're going to get filled, but it's going to be at terrible prices because the only way a limit order can get filled is by a market order. Also, there. Okay. So if somebody came in, let's say we're sitting at 60, 77, a market fill is saying, like, get me in right now at the best possible price. On this COB, these are sell orders, right? So we have 64 sell orders, 98, 162, 56, 85, 46. You can see that we have these small numbers. So if somebody comes and they market order 1,000 buys on ES, this thing's going to shoot up in price. There's not even enough liquidity to, like, for a while, right? It's really going to go high. That's why institutions cannot market order, because that's literally the whole objective of their trade just got screwed if they did that. So they have to put in limit orders, wait for the market to trade to it, and fill them. Sometimes they'll get all of them filled. Sometimes they'll only get partials filled. That's just what happens when you're an institution. So, like I said, these limit orders are institutions. I don't know about you guys, but I don't have 634 S&P contracts looking to go short right here. Maybe some of you do. I do not. Nor do I have the stomach to lose $50 per point on 634 contracts of the S&P futures. Could only imagine what that comes out to be. A lot. I think like 30 something thousand per point. Maybe like 32,000 a point. Let's see if I did that math correctly. 634 times 50. 32,000. So, yeah, these are institutional orders. And we can dictate, are they large institutional buy or sell orders based on where current price is. So if the shading is above current price, that is a sell order or sell orders, right? So current price is here. Here's the shading. These are sell orders. We have a little bit of shading down here. Price is up here. These are buy orders. It's very easy. Again, shading is above current price, sell order. Shading is below current price, buy order. Simple stuff. These volume dots, all they are is the market orders within the market. So, like, the bigger the circle, the more market orders. I don't really pay too much attention to them unless we, like, actually break through a level. Like, say this was resistance, we break above it, and I notice a very big green circle, then, okay, there's a lot of buyers. They can, depending on where price is trading, Alan. Because again, if this sell order was just in the middle of nowhere, it's not like I'm going to short it. Or if these buy orders are in the middle of nowhere, it's not like I'm going to long it. But it can help us with our decisions. So let's imagine that price pulled back. Let's say there was just VWAP here, and let's just ignore overall order flow down here. But let's just say, okay, we went long because of VWAP. We bounced it. Cool. Price pushes up, right? And then we start to pull back. We're in this trade. And again, this is going to answer some of your questions from earlier about holding trades. We're already in this trade. We know that there's a big seller up here, so we should be trimming. So again, big sellers help me understand, should I start trimming into that area going into 60, 75? Say you didn't get your fill, right? Because it fell a few points short. Price starts to pull back. Instead of freaking out, what is sitting right here? Buyers started to push or put their limit buy orders higher, which is bullish. There are buyers here supporting this. Now, if it took out those buyers, then yes, that could be a potential red flag. But those buyers are there. And there is no large seller until here. We have a tiny seller here, but there's no large sellers until here. Comes back, pulls back, hits it, goes into the sell order. Boom. That's where you're looking to trim. And then you can put your stop break even or whatever it is. Notice what happened the next time we started to pull back. The shading started to get a little darker, and overall, this area got thicker of buyers, right? It's not empty space like it is down here. It got thicker. Originally, it was this. Now we have a little more with darker orange in this overall area. Pull back to it. Boom, we hit it, and then we push back up. And then we go into the next area of where there are large sellers, which is right here, this entire like 60, 78 to 60, 80 level. So that's another area that you want to be trimming. And then we pull back. I guess I would have to fast forward a little bit. What are we at? 8:30. Let's put it to 9:30. Okay. It starts to pull back. The buy orders start to get taken out. It pops back up, pulls down again. More buy orders get taken out. We pop back up, but notice what happened right here. So we already had a lot of sellers sitting here. So if you were long, you understand, hey, we need to break above this to go higher. If we took out 60, 78 or 60, 80, whatever, we know that it could potentially go higher, especially because there's no sell orders above besides this 1 point area. But I want you guys to notice when it drops and pops back up. A very large seller came in and put a sell order even lower. So what is that? Bearish, right? Now we have a very thick area of sellers. Thick with 3 C's, not 2, 3. Okay? Pop up into it. There's not enough buyers to take out this area. Again, the only way that limit orders can get taken out in the market is if there is an aggressive participant on the other side. So because there was not enough aggressive buyers, they probably saw this and were scared to try to push price above. The overwhelming sell orders in this area. Boom. Yes, I do have the MBO bundle as well. I have everything through Bookmap. But if you were to short that, how do we know where to put our stop loss while we're looking at this? Can anybody take an educated guess on if we shorted this, say it goes up, it rejects it, and we short here, who can make an educated guess on where we would stop out for a short? Yep. If we take out those large sellers. So again, it helps you understand where should I stop out on the trade? It's very simple. Hey, there's a shit ton of sellers right here. Maybe there was a key level as well. Where's my stop out point if we take out all the sellers? If the aggressive buyers are strong enough to take out these sellers. And then guess what? There's no buyers till we get down here. We can visually see that. There's very tiny ones here, but we're very unlikely to, even react off of it. So where are we trimming? Here. Going into the liquidity, the buyers. The color of the circle is just sellers and buyers, aggressive buyers and sellers. That's really it. So if we take it out and we trade above it, because sometimes we will go up and fill all the orders and then pull back. But if we take it out with strength, that's your stop. And you can see that we go back up into it. Let's fast forward a little more. Start to take out some of those orders. Probably did not trade above it for very long, right? Probably just popped up and right back down because it looks like it was, yeah, like how long was that? You can literally zoom into like milliseconds. So it's probably a stop run if I had to guess. But less than a second, it traded above it. Less than half a second. Less than a tenth of a second, it traded above it. And then it came right back down. So again, now I want you guys to visualize like, how can this actually help us when trading? Well, we already discussed, going long, how it can help you stay in your winning trades, or trying to short like this, identifying your stop loss. Well, if we traded up into a supply zone, I'll show you guys the live trades that I've taken using this. But say we had a supply zone on, what is this? The S&P from 60.75 up to 60.85, for example. Well, we can see that at the beginning of the supply zone, we don't really have sellers. We did here, but they all got taken out. The more condensed area of sellers is up at 60.80, 60.78, 60.80 area. And we go up into it. Boom, we reject it. Pull back if you miss your entry, depending on price action. You got another opportunity right here with a stop right above that. So again, it helps you understand, is this a valid trade? Because if we went up into that supply zone and there was no sellers, yes, and there was no sellers, then you don't take the trade because there's no reason to. Again, supply and demand works based off of institutional orders. If there's no orders, it's not valid. Don't touch it because they're going to be the ones moving the market, not us. How would spoofing orders look? They would pull it. So as soon as the orders get pulled, bam, disappears. And typically, institutions are not going to spoof. So I wouldn't refer to this as spoofing. They just pulled their orders. Maybe they got some of them filled. It already made the move that they wanted. They pulled the orders. I mean, TradingView has footprints, but I don't really use footprints. So does that make sense on how you would be looking to use this? Let's go a little later in the day. Yeah, you see it like literally. This was there when price was trading at 60.72. We knew that there was buyers at 60.63, or all the way down here when price was all the way up here. We now know that there's big buyers at 60.56 all the way to 60.53. Let's see if we somehow trade down into it. Come on. Yeah, it is. I think I might have turned off my computer at that point, actually. Yes, that's why. That's why you can't see any of that. Anyways, so we took out those buyers. You just see it literally destroyed it. I guess I turned on my computer as soon as it started to break through it. But yeah, all of these, you can see them literally whenever. And then I guess I turned off my computer again. But you can see them ahead of time. Again, when you see the recordings are going to help a lot. Live trades. I'll show you a live trade. Because again, it could have just filled all the sellers right here, but there's not enough buyers to just continue pushing it. So, like I said, we'll come back to live trades. And I mean, we talked about the risk management portion. Trader Map Lite is what I use. Pro is like a little more of a filter. But quickly to run through the risk management, these rules are subjective. I want you guys to keep this in mind. But we talked about how to understand like where your actual stop is. Again, I'll show you guys real trades that I've taken. Uh, Rule number one, again, subjective. Never risk more than 1 to 2% of your account. Depends on how big your account is. The way that I trade, the higher the probability, the heavier I go. I know what an A plus 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 setup is, and I know what a B setup is, and I know what a C setup is. I'm not going to use the same size on a C setup than I would have an A plus 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 setup. Does that make sense? So it's kind of, I compare trading to like blackjack or poker. If you know you have the odds in your favor, say you have an 80% win rate in blackjack, you get a let's just say an ace to start off, and you know how to read cards, and you know there's an 80% chance the next card that you get is going to be a king, you're obviously like, if you know how to read cards, you're going to bet heavier. Or if you knew that you were going to get an ace and a king, there's an 80% chance you know you're going to bet heavier. So that's how I look at trading. If it's a very good setup and you have a smaller account, obviously you can't really stick to 1% or 1 to 2%. Rule number 2, position size based on stop loss distance. I don't agree with that confidence part, but when it comes to understanding the stop loss, it also depends like what is my potential entry. Okay. So say this was a supply zone. I got a really good entry because it confirmed right here. Well, I'm risking 3, 4 points, which is nothing. But if I entered a little later, let's say I entered all the way down here at 60.72, now I'm risking like 8 to 10 points. So I can only take, depending on what I'm willing to lose, half of my normal position or half of what I would have been taking up here, if that makes sense. Because let's say you're willing to risk $1,000 on the S&P, which comes out to 20 points, 20-point stop loss. Well, if you're only risking 10 points, then you can take 2. Or if your stop loss is only 5 points, then you can take 4. But if you get a really bad entry and you're risking 20 points, or the market's very volatile and you're risking 20 points, then you can only take 1. So it depends where you actually entering the position. I trade futures all the time. I trade options and futures. Actually, mainly been trading futures. You can do the same thing with options too, just with the option chart. You can still get a really good understanding of your risk with options. How do we add go over here to where it says COB or SVP, whatever, right click and then current order book. Again, we'll talk about that here in a little bit. But yeah, so understanding like where is the trade invalid? That's where your stop loss is going to be. And personally for me, the trade that confirms, or sorry, the candle that confirms my trade, my stop is always on the opposite side of the confirmation candle. So again, my stop loss is on the opposite side of the confirmation candle with either weakness or strength. Have predetermined loss limits per day/week. If I'm down 2K in a day, 3K in a day, I know I should not continue to trade and try to make that money back. Rule number 4, always define your exit before you enter. Let's see. Position sizing, the game changer. Most traders size positions based on emotions. This looks like a sure thing, equals bigger size, or people who, oh my God, we got war news with Iran and Israel. Let's short the market. It's definitely going to go down. Full port their account. Boom, 2 days later, it's gone. Or I need to make back yesterday's loss. Say you lost a lot of money yesterday. I see a lot of people, hey, I can make it back. Size bigger. What happens 9 times out of 10? Boom, gone. Yes, you simply just pull up the option chart, the candle that confirms your trade, look where the option was trading, and then you know where your stop is. Profitable traders size positions mathematically, account size, risk percentage, stop, distance equal position size. Every trader risks, or every trade, I don't really agree with that. It depends. And emotions are removed from the equation essentially because you know what you're risking when you get into the trade. Or if you're trading options, you know pretty much what you're going to lose. So let's skip through that. And we'll come back to this. Cool. So I want to go back to the order flow again. We're going to be jumping around a little bit. But the way that I find key levels in the market is through the use of supply and demand, mainly supply and demand and Fibonacci. So again, these are institutional setups. There's large institutional orders at these levels. I'm mainly going to talk about supply and demand. No, if you're trading SPY and QQQ, you just need the Bookmap data because you'll just pull up the S&P futures. But very quickly, you guys have probably heard me talk about this a million times or seen it a million times on my YouTube or see it in the live trading a million times. But for supply, what we are looking for is a very large red candle to the downside. I use a weekly time frame, a daily time frame, 4 hour, 3 hour, 2 hour, 1 hour, 45-minute, and 30-minute time frame to identify these setups. So I go through all of those. But what I am looking for is a large red candle. I want to look one candle to the left, and that one candle to the left has to be a small red candle, or sorry, small green candle. If it is a small green candle, I mark the lower wick, the open of the body, and then the upper wick right there. That is going to be our supply zone. That is where large institutional sell orders are sitting. The highest probability area for price to reject is going to be the lower wick of the green candle and then the open of the green candle. If it's a small red candle, it is not supply. It has to be green. Okay. So lower wick, open of the body, and then the upper wick. Our highest probability reject is lower wick and open of the body. This is our supply zone. For a demand zone, it's going to be the same thing flipped upside down. We actually, a little hesitant about that one. I think we have a really good 1 hour. So again, it's the same thing flipped upside down. Large green candle. And then we're looking one candle to the left. We want to see a small red candle. If it's a green candle, it does not count. It has to be a red candle. So what I'm going to do, mark the lower wick of the red candle, mark the open of the red candle, and then mark the upper wick of the red candle. Now what this is our demand zone, this entire area. But ideally what we are looking for is for price to react off of the open of the red candle or the upper wick of the upper wick of the red candle. So it just gives us two more direct areas to watch if price were to dip into it, because sometimes our zones are very big. This is a very big 1 hour zone. I'm not watching the whole 1 hour zone. I'm watching the upper wick and then the open of the body. That's it. Or let's break it down to a 30-minute. That's a very small zone. Even on the 30, this is still a very big zone. And sometimes you can get zones within zones. So like right now we do have a lot of demand right here. But again, this is a pretty big zone on the 30-minute. I'm not watching this entire zone. I'm going to watch that upper wick and then the open of the body. That's it. So I know on NASDAQ, if we pull back to 21913 and 21860, watch those exact areas. So again, that's the main way that I find key levels. So what I like to see is for price to trade down into that key level, but I'm not going to take the trade just because price trades into it. I want to see order flow. I want confirmation in the price action, and I want confirmation in the volume. So give me 2 minutes because I'm going to try to figure out how to pull up these recordings. I have a couple that where's micro or Internet Explorer or whatever it is. Let me zoom or let me get the links. I gotta sign in. Yep, trade live every single day in Team Bull. Bro, what is my password? There we go. All right. Let's see, live trading. Which one was this? June 17th. Okay. And real quick, If you guys need a pee break, get water, whatever it is, now is your chance. Give me 2-3 minutes and I'll be back. Pee break, water, be back. Okay. I'm back. I am back. Okay. So I have to remember what this trade was real quick. I think it was this a supply zone reject? Oh, I went long on this candle. Sorry. Go back. Okay, so like I said, I will trade intraday setup, so I'm gonna find the supply zone one. But for this trade, order flow helped me take this trade. What you guys have learned so far from order flow, why do you think I went long? Overall, higher time frame analysis, bullish. We usually trade from one area of liquidity to the next. Oh, it's another indicator. We'll talk about that in a little bit. But we trade from one area to the next, so I had no reason to be bearish. Again, I'm not going to short just because we go up into large sell orders. Why do you think I went long on this trade? My game plan for this trade was for a pullback into the moving averages, because this is a setup that I really like to trade. The 8 EMA, ideally the 21 EMA and VWAP. Okay. So we push up, we pull back down into it. As we start to pull back into the 8 EMA, I notice that we have thick buyers from 60.66. It's a lot of 60.66, all the way down into 60.62. Okay. So a majority of the buyers were here at the 8 EMA, but visually seeing that the buyers were there was not a lot of sellers. There was here, but we took them out. They're still like a little bit at 60.75, but not, super alarming. But this is a thick area of buyers. So as we pulled back and we reacted, because all we did was pull down into it, right? Pull down into it, immediately bounced. I went long. I started my position and I was willing to add more if we got to 60.64, which was that VWAP 21 EMA area. And I would have stopped right below. So mute that. There we go. And you can see immediately it started to work out. So my first price target was as we started to get up into that high day, that 60.74 to 60.75, which you can see we had some sellers sitting there. You can see I have my mouse on it. Yep, below VWAP. If we took out these buyers and broke below VWAP, I was out. originally. Again, I was looking to add more. And then boom, we get up into that high a day. Now you can see as we get into that high a day, we still have a lot of buyers right here, right? Here's price, here's the buyers. Got to take out these sellers at this high day, and it should continue pushing higher. Buyers are still there. And guess what? Boom, it goes higher into the next area of 60.80. So then we're going to look to trim going into the sellers of 60.80. And now we understand if we want to go higher, we have to break above 60.80. So I'm already trimming, moving stops up, and we went into the supply zone right here. It wasn't like uh it's not a very high probability supply zone, but this ended up being high day, the 60.80. And we can see going into 60.80, there's a shit ton of sellers. So trim, move your stop loss up. We already got one trim there, another trim here. Move your stop loss up. And that actually ended up being the high. We sat there and we like consolidated in that overall area. And then eventually it started to pull back and it hit my stop in profits. You can start to see as we sit in this area as well that the buy orders start to, disappear. That doesn't necessarily mean like get out of your trade because all it takes is, a few big buyers to push us through. But if we actually like were bearish, and hopefully this makes sense, but if we were bearish and that was a really good supply zone, that's a good sign that price is going to pull back. Does that make sense? Hopefully. Okay. Because like again, if you're long, yes, that's like a warning sign, but it's not like, hey, get out of the trade because we can still take them out. But if we like actually want price to reject off this area and the buyers disappear, then that's a good sign for us shorting. But yeah, you'll see price pulls back. And I eventually stop out. And then again, you can see here, if you were like wanting to short, that is picture perfect. Already had that thick area of sellers at that 60.78 to 60.80, and then all of a sudden this big ass seller comes in. That's exactly what you want to see. Go short, stop right above the sell orders at 60.80, and I actually think that's what we had pulled up on the order flow. And that actually ended up being high day. Price pulled back after that, which we saw. It was the same day, actually. So that's one trade. Let's find another trade. I cut two of them, but I have a bunch of trades. Probably show you guys like three or four because I have a decent amount. Where's it at? Here's another one. Okay. So this is an actual supply zone that I traded. And I don't know how many. I think it was a little over 10, I believe, for my entry. Yeah, like 12 points. So here's a supply zone. Again, ideally with the supply zone, I'm watching the bottom of the bottom wick and then the open of the body. So we start trading up into it. I like to watch NASDAQ and the S&P. This was like picture perfect, amazing trade. So we go up towards the supply zone. I start to notice that we do have a lot of sellers on the NASDAQ, not a lot of buyers at this 21950. So I start my position, right? But I was willing to add to my position if we popped up closer to this 60.48 and the NQ supply was a little higher, I think somewhere up here at that point. So that's why I started my position. You notice that price tries to pull back. It bounces. If you guys live trade with me, you remember this trade because this shit was fire. It bounces. I want you guys to notice something too, because we're actually going to watch this recording right here. NASDAQ breaks above. How many of you would get scared from this candle? Would you stop out? Yeah? Well, guess what? What do we see at 60.50 on the S&P? I would like a thicker area, but you know, it's a lot of sellers specifically at 60.50. So we pop up into it, and this is where I really want you guys to watch. Originally, there was 326 sell orders. We pop up into it. Notice how it dropped to 250 at one point. Now it's back at 264. It's filling more, but the sellers are adding more at that area. So keep watching this number. It's going to pop up again. It's at 235 right now. Drops to 160. Boom, immediately back at 230. Pops up again down to 194, back up to 240, 230. At the same time, this 21980 was the exact open of the NASDAQ supply zone, or maybe the wick. I'll pull up NASDAQ on the screen. You'll see it. But the exact open or bottom wick. And we can visually see their sellers, where are the buyers. I mean, we got a little bit right here, but not compared to the sellers. And then below that, guess what? Nothing. So and boom, you can see they start adding more. We take out the buyers. As we get back down below this level, again, from all that selling that happened, the selling and re-adding, what do we also notice? There is no buyers on the S&P. None, which is a good sign to short it. So you'll see me flip to the 2-minute. At the same time, there it is, that 21980 for the NASDAQ. I think I already added to my position at this point. But look at the volume. This is why reading within the order flow with the volume is very important. Because in hindsight, that's bullish. But in actual, like reading into the market in order flow, this candle is bearish. Very, very bearish. Because where did most of the activity come in? Up here. And where was most of the activity? On the sell side. How do we know that? We watched it happen at 60.50. All that volume came in up here. Every time it popped up, boom, back down. Popped up, boom, back down. Right? So most of that candle's volume is going to be up in this area. Added to my position. Stop right above 60.50. Why did I choose 60.50? From my average, I was risking 3 points, give or take. Obviously, if it broke above 60.50. But 60.50 was my point of invalidation. Why? Because 21980 on NASDAQ was the beginning of the zone. Take out those sellers, obviously, get out of the trade, but also 60.50 was that line in the sand. If we were going higher, right? Get above there, I'm out. Okay. And what you're going to notice is we go timber eventually. Timber. But yeah. Came out to, what was it? 3.5 points. That was my risk for 18 points. So 5-hour trade, give or take. 4.5, 5-hour trade. So that's another example. I'll show you guys one more. Let's see, 6/9. June 9th. Okay, so for the final example, this was 30 points on NQ. Wasn't anything crazy. Obviously, I was looking for more. but order flow helped confirm the entry. Again, the exit would have been for trimming or stop loss. Trimming, I kind of just trim as I feel necessary and use the heat map as well. So with this, the trade setup that I was watching was for NASDAQ to retest this 21824, which was pre-market highs. Get out of here with that. But then we also had an imbalance, which you'll see me draw from, go back to it, from here to here. So I was watching 21839 down to 21824 for my potential bounce. Okay. As we fast forward this, bring it back a little bit. As we fast forward, what do we see? This entire area from this 2140 right here all the way down to 21820, which is right below pre-market highs. There was a lot of buyers. Not a whole lot of sellers, but a lot of buyers. Okay. So you'll notice we dip down into the area where the buyers are. And as soon as we start to pop back up, I get into the trade because, again, we have a lot of buyers right here. So my risk is below that. I get into the trade and I am willing to add more if we dip into these buyers. Unfortunately, I did not get the chance to add because it immediately started working out as soon as I got it. I caught this move up. So again, it was like 30 points and then stopped out. Can't remember if it was in profits or break even, I guess right there. So I put my stop up in profits a little bit by a few points. But that's just another example. That's 3 trades, order flow, key level, simple stuff. So, and again, I trade that every single day. Fire. Yes, indeed. So, and then just some like miscellaneous stuff, money management math to make 100K. It's really not that hard to make 100K trading if you know what you're doing and you don't trade like you're brain dead. But there's 252 trading days in a year. You need to average $396 per day. That's 8 points on one ES every day. On one ES. With a 2-to-1 risk to reward, you need a 60% win rate. 2 to 3 trades per day maximum. I don't even push 2, to be honest. Most of the time it's 1. 1 and done. Take one high probability setup. If it hits and I do see a second setup, I'm only risking some profits. That's the number one mistake I see people make. They have a good trade, they go back in, they risk all their profits plus more. That's stupid. So I'd say 1 to 2 trades max per day. There's been times where I take 3. It's very rare, but it just depends on, what's I about to say? The overall market that day. And again, I saw a couple people ask to get Bookmap, you want to use this link right here. And you want to get Global Plus and then Bookmap data with CME data. They're like they go together. Yes, both futures and it depends. As far as red trades, if I see an opportunity, then yes, I'll take it again. But trading success is 80% psychology, 20% strategy. I don't know why it still says Jadon's orb. But order flow, not the orb. Get that out of here. We don't trade that 15-minute orb. No. But order flow removes emotion through systematic execution. Risk management keeps you profitable long term, and following institutional patterns give you an edge. So, question for you. Has this masterclass already changed how you think about trading? Give me a yes if you feel more confident about becoming consistently profitable. Because again, you can literally see where these buyers and sellers are within the market. If there's no buyers or sellers at your key area, don't take the trade. If there is, take the trade. You know where your stop loss is if we take out the buyers or sellers. It's really that simple. So, was this worth your imaginary $2,000 investment? Hell yeah. So, here's what I want to know about you. You're here because you want more than just tips and tricks. You want the complete framework that creates consistent profitable trading. You're tired of emotional decisions sabotaging your trading. You're ready to treat trading like the business it is. Jam packed with value. That's what I love to hear. So, mm, 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 mm. Yeah. So the reality check, what you've learned tonight is valuable. Again, order flow is a big part, but it's only about 20% of what you need to become consistently profitable. So here's you guys. To get the full framework, you're going to need complete psychological training, advanced risk management systems, live trade execution. I live trade every single day, and personal mentorship and accountability. So I do have something special for everybody that joined or anybody that's watching the recording. If you've been here for over an hour when you could have been doing anything else, I don't know why that's all messed up, but if you've been here for an hour and you could have been doing something else like watching Netflix or twiddling your thumbs, looking at a wall, whatever you guys do in your free time, that commitment means something to me. So if you guys are interested in mentorship, I do have more that I can offer you guys. So if you guys are interested, comment mentorship if you want to hear about the complete program. Cool. So, Brandon's Master Mentor Program, building the next generation of profitable traders. I just went through another round of mentee students and they're loving everything that I've taught. My one on one student's actually up a little over 10K in the last month. He's killing it. But what you get in the Master Mentor Program, phase one, psychology mastery, complete emotional and control framework, pre-trade mental why can I not talk? Pre-trade mental preparation routines, loss and winning streak management, confidence building through systematic execution. Phase two, which is strategy implementation, advanced strategies. I teach my entire strategy, multiple market condition adaptions because the market is always changing. And trust me, through my 8 years, I've been through many different markets, entry refinement and timing exit, and then strategies for maximum profit. Phase three is going to be risk and money management, personal position sizing calculator, daily loss limit or daily and weekly loss limits, account growth strategies, professional trading business setup. And then phase four is going to be the master mentor, which is 5+ coaching calls per week and 5+ group coaching calls and mentorship calls per week, exclusive one on one support, and hands on accountability. So I do all of that. Also, what you get in the Master Mentor program is daily live trading sessions with me. Again, every day, I share my screen. You hear exactly what I'm trading. You know exactly what I'm looking for. You know when I enter, when I trim, when I exit, when I move my stop loss. I'm sure many of you can, what's the word I'm looking for? Um, Vouch for that if you already trade live with me inside a Team Bull. You can ask me questions in real time, especially if there's downtime in the market. You get to see why I take personal trades and learn from my mistakes and wins because there's times where I take losses. Sometimes, maybe the trade goes against me a little more than I would like. You get to learn why. Okay. But then you also get access to me and Team Bull for the rest of your life. So you get lifetime inside of Team Bull. You get to connect with other traders, 24/7 support, and share trades and get feedback. Yeah, you have my Zoom up every day. That's what I like to hear. But also, because we're doing one next month in July, you get access to in-person events with me and all members of Team Bull, anybody who shows up, in-person live trading, which we're going to do. I forget the exact dates. I think it's like mid-July, but we're going to be live trading an entire day of teaching, education, feedback, and Q&As at that in-person event. So, what you get in the Master Mentor program, lifetime access, the 18th and 19th. plus direct access to me, personal one-on-one mentorship, one-on-one calls to address your specific challenges, customized trading plan for your situation, direct accountability partner. You get my phone number if that sounds any better. If you guys want to text me at 2 a.m. because you're thinking about me, guess what? You got my number. Plus trade tracking and mentor mode via TradeZella. So I can actually see your trades and we can go back and we can sorry, my voice goes out whenever I start talking over an hour. But we can actually go back and I can see your exact trades. So a lot of value in that. But some people say I don't have time for this. Let me ask you something. How much time do you spend watching trading videos that don't help, analyzing losing trades you could have avoided, recovering from emotional trading mistakes, or working a job that you want to replace with trading income? Spend a lot of time doing that stuff or watching Netflix or whatever it may be. Spend a lot of time doing that. The Master Mentor program requires 1 to 2 hours per day. So at max 14 hours a week. They're all recorded as well. Your current approach probably takes more time and gives you worse results. So would you rather spend 90 days learning the right way or spend the next three years struggling with the same problems? I think it's pretty clear on which decision you should take. So this is how everything comes out to be. And I do want to drop my link. Hold on 1 second. There we go. I want to drop my application link if you do want to learn directly from me. But pretty much what everything comes out is you get the whole Master Mentor program, the one-on-one sessions, the private community, lifetime and team bowl, in-depth mentorship calls, which is going to be with me, Jay Dunn, GD, Greg, etc., in-person BullCon events, and then my personal phone number, which actually should be priceless. Because again, think about me at 2 a.m., you want to text me, I just probably won't answer you until the morning. But hey, if you want to text me that early, go right ahead. And then lifetime access to Team Bull. Literally, you trade with Team Bull forever. So again, if you guys do want to learn directly from me, here's my application link right there. Takes like a few minutes. Hey, I mean, hey, if you really want to text me. If all this did was break you past all the roadblocks to finally become consistently profitable, making $1,000 a day, would it be worth it? Build you a sustainable full-time or secondary income source, would it be worth it? Give you the freedom to be with your family and do whatever you want, whenever you want, would it be worth it? Again, I trade an hour and a half, 2 hours a day. That's it. And then I can do whatever I want. That's perfect for a family. But would it be worth it? So, with all that being said, I will only be accepting 5 traders in a private one-on-one mentorship just because I don't have time to be teaching 10, 20, 30 people all one-on-one. So, like I said, if you do want to apply and learn directly from me, especially in a one-on-one environment, click the link that I just sent again. This is for serious traders only. So if you're ready to master your trading psychology, implement a systematic approach, become consistently profitable, have direct access to me daily, and again, my phone number, click that link, fill it out. Oh my God, my voice keeps going out. I only have 5 spots. Oh, I've been sending the link this whole time. Hold on. There it is. There's the link. There's the link. You guys see it now? Panelists. What about now? Do you see it now? I see some yeses and some nos. Okay. Now you guys can see it. So again, if you want to learn directly from me, I'm taking 5 people. There's that link right there. So the guarantee is if you follow the program for 90 days, attend every live trading set or every live session, trading and classes, implement the psychological framework, follow the risk management rules, and put in 110% effort on every one-on-one call we have, take action on what you learn. And if you're not seeing results, I will work with you. Okay, that just decided to fall. If you're not seeing results, I will literally work with you for free until you start seeing results. Because I'm very confident in my system. I trade my system live every single day in front of hundreds of you. So if you're not seeing the results, we're going to sit there and we're going to work it out because I know the system works for me. It's worked for many, many other students. So I know it can work for you as well. So I'm sure some of you are saying this sounds too good to be true. I get it. You've probably been burned before. Maybe you bought a course that didn't work. Maybe you followed a guru who disappeared. Maybe you tried other programs that overpromised and underdelivered. But here's what makes this different. I trade live every day. You see my results, just not just highlights. You know when I lose, you know when I win, you know the exact trades I take. I personally mentor each student. This isn't just a course that you go watch pre-recorded videos and then you figure it out. I teach live. I answer your questions live. I'm there for 24/7 support. I guarantee your success. If you don't become profitable, again, I will work with you for free. And then I focus on psychology, the real reason most traders fail. So, this isn't about getting rich, it's about building a sustainable and profitable trading business. Also, what if you're not ready? You'll never feel ready. I don't think anything in the world you feel ready to start doing. You have a kid, most of the time people are not ready to have their first kid. But hey, it happens and you go with the flow. So, if you're waiting to feel more confident, have more knowledge, or have the perfect setup, you'll be waiting forever. The students who get the best results are the ones who start before they feel ready, commit to the process completely, and trust the framework even when it feels uncomfortable. You don't need to be ready, you need to be committed. Why this will work for you? You have the right psychological framework, a proven profitable. Oh my God, I cannot talk. A proven profitable strategy, professional risk management, personal mentorship, and accountability. So, how can you possibly fail with this foundation? So, the choice is yours. What the hell? Continue struggling with inconsistent results, emotional decisions, and hoping for the best, or get the complete framework, personal mentorship, and systematic approach to become consistently profitable. So, like I said, apply with this link right here. Click the link in the chat to apply for the one-on-one mentorship. Applications close when 5 spots are filled. You have that link right there. This is a actually no. Just make sure you use this link, the application dash today. And then I'll be here answering questions for the next 15 minutes. Remember, you already know what you need to do. Now it's time to actually do it. So, everything that we just went over, bookmap, charts, what questions do you guys have for the next 15 minutes? Again, Brian, sign up. You get more information. Okay. So to put the actual number is you'll come up here. It's just called liquidity marker. So you'll just go to manage add-ons, scroll down till you find liquidity marker, install it, and then you just check it, max liquidity level. That's all you need. Michael, yes. And again, to make your book map look good, you need Trader Map Lite. You need to set your contrast all the way up. Let me scroll up. With this mentorship, you get the in-person events, the one-on-one sessions, and the continuous teachings. So I'm going to be running them every single quarter. So if you were just through this past mentorship I did, you get access to the next one that I'm doing next quarter. It never goes away. You continuously get it, the in-person events and all that good stuff. If you don't find any supply and demand zones, then they're not on the chart and you look for a different intraday setup. I have a handful of setups that I like to look for. Yes. Global Plus and CME data is going to make it so you can actually see futures. And I mean, you don't need Bookmap to be profitable. I traded many years without Bookmap and was profitable. It just helps give you that further edge and that further confidence. I've been using it every day for I think a little over 2 years, maybe going on 3. Typically the S&P, Anthony, the S&P and NASDAQ are going to move together. So that's why I watch both of them. The way that I trade is understanding higher time frame analysis. So where are we going to trade? We're typically going to trade from supply to demand or demand to supply or, etc. We're going to trade to one of those zones. So I understand from a higher time frame where are we likely going to trade to, and then just break it down to a 5 minute. And then there's a